So welcome again to this particular session and a lovely good morning from here in Tally. Hope that each one of you as always are absolutely fine, hale and hearty. So now in this particular session we have decided to pick up cash flow statement, and of course as you can see on your screens also we have written that cash flow statement and AS3 revise. So it means actually that in this particular chapter, cash flow statement, we shall not only actually deal with preparation of the cash flow statement, we shall also consider what we call accounting standard AS3, which means we are going to do simultaneously cash flow statement and AS3 revised. Correct? So now cash flow statement, what should I tell? Actually, most of the concepts are already known to you. Pretty easy chapter, isn't it? The first point, the moment actually you hear cash flow statement, the first thing which comes and crosses your mind is that it's a pretty easy chapter. No doubt about that. I do agree with it. I also agree with it that most of the concepts are already known to you because you have done this chapter so many times in the past also. But in spite of that, actually let me caution you, don't take it as a walk in the park or a stroll in the park, correct? And neither consider it as a cup of coffee as we normally call. Never do this mistake of taking the things lightly at this particular level. That is of paramount significance. The point is that cash flow statement is not as easy as you used to actually think, and reason being is that because at this level we need to do the correct treatment, and the treatment sometimes are clumsy, regarding which we need to have a concrete solid background and knowledge and foundation also. So anyway, we start cash flow statement as we normally do. We'll write some theory initially, then we'll move over to the practical part, cash flow statements. Now the cash flow statement, of course, name itself suggests that it shows the flow of the cash. Of course, I need not require to tell you. But the significance of the cash flow statement lies in the fact that when an entity actually prepares profit and loss account in balance sheet, as you know, balance sheet is a position statement. It reflects the position of the entire business or the affairs of the business on a particular date. Whereas profit and loss account is a periodical statement. It simply reflects what we call operational results of the period. It means profit and loss account actually fails to convey any information with respect to the flow of the cash. For example, we might have made a very heavy investment, say of 100 crores. Now this point will not be reflected by what we call cash flow profit and loss account, and because of this limitation of profit and loss account, the importance of the cash flow actually enhances. The reason being is that cash flow statement will exactly let you know actually how the cash was utilized, what are the sources of the cash, and what exactly are the application areas of the cash. So you can accordingly base your decision. For example, if I am investing into a particular company and let us say I find the profit quite less, let us say just 10 lakh, but I should not base my decision of investment on the basis of the operational result that company has been able to earn a profit of 10 lakhs only. Now when I am going to analyze the cash flow statement of the company, suddenly I find that in the current year company has made a very heavy investment, let us say of 500 crores. So accordingly now I can base my decision because I know company has made heavy investment and in future company will definitely earn more. So I should invest in this particular company. So you must have seen actually in this particular case which I just gave, I didn't consider only the profits of the company to base my decision of investment in this particular company. In fact, what I did actually, I had a look over the what we call cash flow statement. Accordingly, I based my decision. So that is exactly the importance of the cash flow statement. Next important point is that you have heard financial statements of a company. You have gone through that particular chapter also. Now we know that what financial statement comprises of, correct? Financial statement, besides what we call profit and loss and what we call balance sheet, cash flow statement is also a part of financial statement. Don't let it escape out of your memory. But at the same time, every company, it is not a mandation that every company should prepare what we call cash flow statement. Although there is no mandation, but most of the time we nowadays actually see in practice that most of the company, in spite of what we call not having any mandation or foundation, they do actually supplement their financial statement with a cash flow statement. However, level 1 enterprises, all such enterprises or entities which fall under the level 1 category, they must actually prepare. That means the foundation is only on entities which fall under level 1 enterprises, which means that their shares and securities must be listed, and at the same time their turnover must be over what we call 50 crores. Is it clear to you? So all these points are quite vital, so we need to actually just consider here the important aspects, correct? So write along with me now. Cash flow statement, of course, we are picking now. Under the cash flow statement, right? As per AS3, as per, what happened to the pen? Oh my God. Sometime pen creates problem. Just wait. As per AS3 revised, as per AS3 revised, correct? All level 1 entities, all level 1 entities, level 1 entities must prepare cash flow statements. As per AS3 revised, all level 1 entities must prepare cash flow statement, correct? Point number 2, cash flow statement cash flow statements, CFS, correct? Cash flow statement, as the name suggests, as the name suggests, as the name suggests, correct? Simply reflects the flow of cash. Flow of cash means what exactly are the sources and what exactly are the applications of cash. Flow of cash. Is it clear to you? But before we dwell further, we must understand the meaning of cash. It is very important for you to understand this particular point. Generally, I will use the red pen also, as you know, it is my habit. Generally, cash, it means we are defining cash. What exactly cash means? Two terms are quite vital: cash and its equivalent. You have been using these terms so many times, but I have seen actually most of the time a student even sometimes falters when they are asked to actually explain the meaning of cash. So cash, generally cash refers to cash in hand, and cash at bank, Generally, when we say cash, so it means cash in hand and cash at bank, correct? Full stop. As per ICAI, that means Institute of Chartered Accountant of India, cash includes A, cash in hand, B, cash at bank, that is demand deposits with bank. Demand deposits with bank means such amount which you can demand any time at any point of time, correct? And as per ICI Council, you need to pay attention that term cash includes cash equivalents. That is the point I wanted to bring to your notice. So term cash includes cash equivalents. You got my point or not? So such minor finer points, being a professional student, should be known to you. Now obviously we will go for cash equivalent. What is cash equivalent then? Cash equivalents are part of cash as per AS3 revised. And we have just seen also that cash equivalent is part of cash. First of all, you must understand that. A part of cash as per AS3 revised, correct? And defined as short-term highly liquid investments. Short-term highly liquid investment. That means cash equivalent means liquid investments. They are highly liquid investments, which means that you can encash such investment in a very short period of time. Investments that are readily convertible. Readily means easily, readily converted or convertible, you write convertible into known amounts of cash. Suppose if we have made an investment, liquid investment, let us say 1 lakh. Now this 1 lakh is a known amount. That means when you are going to convert it, you must get 1 lakh worth of cash. Then only it will be considered as cash equivalent. Suppose if, in my opinion, investment might be liquid, but after converting, if I get only, let us say out of 1 lakh I was expecting, but if I get only 90,000, then it cannot be termed as what we call liquid investment or cash equivalent. It is very important to understand each and every word. Is it clear to you? That means whatever investments were worth for, you must get cash in exchange of same, correct? When you are going to convert them into cash, convertible into known amounts of cash. And which are subject to an insignificant risk of changes in value. That was the point I was just trying to tell you. If you have investments of 1 lakh, there should not be any change in its value when you get converted it into cash. If there will be a change in value, that means there is a risk involved, so it cannot be what we call considered as a cash equivalent, because it is not convertible into known amount of cash. Is it clear to you or not? So these are the things which you should be aware of. Now, we move off way bit further. Initially, I said normally an enterprise actually prepares profit or loss account balance sheet, but these financial statements actually fail to reflect or convey any information with respect to, as I said, flow of cash. So that is why the importance of cash flow statement in fact comes to foray, because cash flow statement will exactly let us know how the cash was flown into the enterprise and how it actually moved out of the enterprise. Correct? So we write here, since comma profit and loss account and position statement or balance sheet fail to convey any information regarding flow of cash, comma, importance of cash flow, importance of cash flow statement, importance of cash flow statement importance of cash flow statement gets enhanced means increases, gets enhanced in this backdrop. So in this background is that profit and loss account and balance sheet fail to convey any information with respect to the flow of cash. So in this background, actually the importance of cash flow increases, because it let us know, as I said so many times, in fact I have said already, because it will let us know exactly how the cash is coming into the business and moving out. Is it clear to you? If you have written, I can move over to the next sheet then. So here we go. As we know, as per AS3, cash flow statement is prepared under 3 headings, needless to actually tell you, because all these things are already known to you. But it's still just to recapitulate the things. So point number 6, I write, as per AS3 revised, cash flow statement is prepared. Under 3 heads. Viz, namely, A, cash from operating activities, cash generated from operating activities, B, cash flows from investing activities, C, cash flows from financing activities. Cash flows from financing activities. Correct? Is it clear to you or not? Just wait. Let me have a sip. My glass of tea actually just received her. So after having a sip of tea, now we move further. Let's have a look over the what we call these activities, isn't it or not? So first we will have a look over 1, in fact 7th, cash generated from operating activities. From operating activities. Operating activities. Operating activities are nothing but your principal revenue generating activity. For example, if you or I happen to start a business, it is quite obvious that in order to run the business, we shall have to do sales, we will have to make purchases, we will have to deal with the customer, we will have to receive the payment, we will have to give the credit facility, we may have to receive the bills receivable. Similarly, we may have to purchase the goods on credit, we may have to make the payment to the suppliers of the raw material, we have to accept the bills, we have to make the payments. So all these activities are nothing but normal business activities. Put it in simple words, these are the what we call principal revenue generated activities. Correct? So it means, so operating activities, so cash generated from operating activities simply means the cash which is generated by principal revenue generating activities, and I just named those activities before you, isn't it or not? So simply, so right here now, so cash generated from activities simply signifies cash generation through principal here means main, principal revenue activities such as 1, cash receipts from sale of goods and rendering of services cash receipts from just wait, cash receipts from royalty, royalty, royalty fees, commission, all these are normal principal revenue generating activities. Commission and other revenue. Third, cash payments. Cash payments to suppliers. Cash payments to suppliers for goods and services. Goods and services. Fourth, cash payments to employees. Fifth, cash payments and refunds of income tax So generally these are what we call normal principal revenue generating activities. So whatever cash we receive from such activities is nothing but cash generated from operating activities. Then investing activities. As far as investing activities are concerned, investing activities are the acquisition, all these things are already known to you, acquisition and disposal of long-term assets and other investments. So in simple words, investing activities basically comprises of acquirement or disposal of long-term assets. It will also include what we call acquisition and disposal of investments. Like 1. There are so many, correct? Sale or purchase of property, plant and equipment or fixed asset, whatever you may like to write. Is it clear to you? Second, sale or purchase. Instead of purchase, you can also write acquisition, sale or purchase of investments. Written? I'm very slow. Then similarly, receipt of dividend. Third, receipt of dividend. If you have received any dividend, it will be considered as what we call investing activity. This is the point you need to take care of. Third, receipt of dividend. Fourth, receipt of interest on investments. I think these are enough. Then you write further. Third, that is our point number 9. Financing activities. Financing activities actually are those which result in changes and the size and the composition of what we call capital structure, you can say. Correct? So financing activities are activities that result in changes in the size and composition of capital structure. For example, when we are going to issue more shares or redeem shares, it is going to affect the capital structure. Similarly, if we are going to what we call raise borrowings, or when we are going to raise loans or repay, then it affects the capital structure. Examples: 1, issue and redemption. Issue and redemption of shares, debentures, bonds, etc. Correct? Second, raising or repayment of loan. Raising or repayment of loan. Repayment of loan. Third, payment of dividend. Payment of dividend. Correct? Fourth, payment of interest. Payment of interest. Correct? So all these are examples of financing activities. So far what we have seen, in fact whatever we have done so far is already known to you. We have done nothing new so far, to be very honest with you. We are just trying to recapitulate the things which we have done in the past. But now the most important part, I am coming over to point number 10. that is cash generated from operating activities. Once again we are returning to this topic, cash generated from operating activities. Cash generated from operating activities. Do you remember when you used to prepare your cash flow statement earlier? You used to calculate cash generating from operating activities separately, and you used to actually add and sometimes subtract lots of items to the net profit. Correct? So in order to compute cash generated from operating activities, what you used to do earlier, what you used to do, first of all, you used to take the net profit, then you used to add some items, then you used to subtract those items, if you remember. Correct? We are of course going to have a look over all such things, but it is important for us to understand some basics. Correct? So just wait for a while. Sheet sometime here flutters down, and that is the reason actually it becomes a little bit of problem. I will give you not only the logic but the firm grounding, because in my opinion this is the most formidable part to understand cash flow statement. Because I'm not telling that you are unaware of the methodology to how to compute cash generated from activities. You are aware of, but the problem is that seldom we know the logic actually why we are doing that. But anyway, first of all, I am making a format. Correct? Cash generated from operating activities can be computed by applying direct method or indirect method, unless and until otherwise stated. Unless and until otherwise stated, I would use indirect method only. And later on, when we will reach the closing stages, we will talk about the direct method. However, enterprises generally actually are advised to actually compute cash generated from operating activity by applying indirect method. Anyway, don't get confused at this moment. Simply just pay attention towards cash generated from operating activity. In order to compute cash generated from operating activity, what you used to do, first of all, you used to take the net profit. Correct? Net profit. So whatever net profit is there, you used to actually add some items. Correct? Add. Generally it is known as adjustment for non-current and non-operating items charged to P&L. Charged to P&L. SPL. So we used to add items like depreciation, correct? We used to add items like depreciation, provision for tax, proposed dividend, transfer to reserves, we used to actually add these items. Why we used to add these items? The question is this. Similarly, goodwill written off, goodwill written off, then preliminary expenses written off, preliminary expenses written off, similarly underwriting commission written off, underwriting commission written off, then loss on sale of fixed asset, loss on sale of, nowadays instead of fixed asset we use the term property, plant and equipment, loss on sale of property, plant and equipment or investments. Similarly, premium on redemption, premium on redemption, correct? Is it clear to you? You used to add some items and then you used to subtract some items. Which are the items which you used to subtract? I will give you the logic also why you used to do that, why we used to do that. But before that, let me write the things first. Write here less adjustment for non-current and non-operating items, non-operating items, non-operating items credited to P&L. These items have already been credited to P&L. Now we are going to subtract, correct? Like interest earned, interest, dividend, profit on sale of, profit on sale of fixed assets, or property, plant and equipment, whatever you may like to write, and investments. So we shall subtract these items. After subtracting these items, we will get operating profit before working capital changes. Operating profit before working capital changes. Working capital changes. Correct? And then what we used to do, add increase in current liabilities increase in current liabilities decrease in current assets then we shall subtract less decrease in current liabilities decrease in current liability current liability increase in current asset increase in current asset, correct? Then we shall get profit, operating profit from operations then we shall subtract income tax less income tax paid correct? Cash generated from operations after tax and in case if there happens to be any extraordinary income, you are going to add it. Add extraordinary incomes less extraordinary losses. Extraordinary losses. And then we will get cash generated from operating activities. Cash generated from operating activities after adjustment for extraordinary item. After adjustment for extraordinary item, EOI, extraordinary items. So this is what you used to do so far. Now in the next session, upcoming session, what we are going to take the issue of we are going to analyze what we have done with respect to this format, cash generated from operating activity. We shall try to find the answer why we do that, why we need such a long exercise, what is the logic behind that, because unless and until logic will be clear, things will be what we call mired. So it is better to have a good, clear, unambiguous, what we call with clarity, the entire grounding. So in the next session we shall talk about that.